This is section 11 of the training. In this section, we'll be discussing the use of an additional chart per signal confirmation. Well, it's a pretty well-known fact by most seasoned traders that all markets go through cycles. When the market is in a cycle of good, smooth price movement, moving up and down, which movement we call volatility, signals become more accurate overall. No market stays consistently smooth and volatile all the time, however. They go through cycles of consolidation and overall choppiness. And the result is that, well, for the most part, the signals produced in an average day lack the desired 2.25 points of price movement to be taken for a 2-point profit target. When this occurs, it becomes quite beneficial to add an additional chart to your trading methodology. You'll probably want to continue using this extra chart even if your market is trading in normal good. The chart addition that we recommend is called the 3-minute chart. As you learned earlier, we primarily use a 1-minute chart. That is, each candle represents exactly 1 minute of trading activity. Now let's add a 3-minute chart. And the following procedure is for students using Future Source only. This is the preferred and recommended data feed platform to use. It is beyond the scope of this training to try to go through the various procedures for setting up the 3-minute chart in any other platform. With the 1-minute chart set up, click on the window in the upper left, shown by the arrow, and then click on the Duplicate Window option. Now you will have an exact copy of your 1-minute chart. Now you'll want to convert it to a 3-minute chart. You make that 3-minute chart conversion by simply highlighting the number 1 in the box indicated by the arrow and changing it to a 3. Hit the Enter key and you'll have your 3-minute chart all set up. You can grab the 3-minute chart and move it and resize it around to your desired location. Or you may choose to add a second monitor and move your new 3-minute chart over to it so that you can easily see both charts fully and simultaneously. With your 1 and your 3-minute charts in view, you are ready to identify signals and gain some extra accuracy from your new chart addition. Since each candle on the 3-minute chart covers 180 seconds of trading activity instead of the 60 seconds that we use in the 1-minute chart, you have more data, and thus a stronger indication of the direction that price is heading. This can be very helpful for knowing if we should or when we should take a signal on our 1-minute chart. Well, if the 3-minute chart is more powerful, why don't we just trade off of it? Well, mainly because we get quicker market entry with the 1-minute chart, and we'd also get a lot fewer signals if we just traded off the 3-minute chart. But together, they make a great team when used in the following manner. On the 1-minute chart on the left, notice the sell signal and the confirming candle indicated by the black arrow. Well, that signal is barely over 2 points in overall volatility, and we may want some extra confidence here that this signal has a good potential to reach our profit target. So we bring up our 3-minute chart and we take a look. Here we see that the DS is indeed pointing down, as well as the MACD also pointing down. It's very important that this be the case. Additionally, we want to see a red or down candle at the time of our 1-minute chart signal confirmation. Remember, with the 3-minute chart, we can't always tell in hindsight if the signal was actually confirming on the 3-minute chart at that minute. And that's because the 3-minute chart is an aggregate of multiple minutes of trading. But here, it appears that all looked well, and if so, we can take the trade. Now let's go forward in time to see the result. Now there's a good move in our profit direction, and our stop was not threatened. Now let's look at another chart example to see another way that we can use the 3-minute chart to help us. Here we see a sell signal with confirming candle indicated by the arrow. When we look at our 3-minute chart, we see that only the DS is correct at this time. The other candle is green, and the MACD is pointing up on our 3-minute chart. Both are contrary to our signal. Often we can simply wait for the 3-minute chart to confirm the signal and then enter at that time, as long as we have not lost any significant amount of profit potential with the difference in market entries. Going forward a few minutes, we see that now the 3-minute chart is correct for a short, and we can enter on the 55th second of this candle. If our entry on the trade at this point is more than a quarter point worse than the closing price of our original confirming candle on the 1-minute chart, well, we recommend that you might think about skipping that trade, or maybe you might reduce your profit target by that amount, subtracted from your original 2-point target. And it's okay if the 1-minute chart is no longer confirming. We already received the confirmation earlier. Now we see that price was actually ready to move in our trade direction, and our 2-point target was quickly reached. One of the really significant advantages of using the 3-minute chart is having the ability to take choppy signals that we might otherwise have to pass on. The signal in this example is, by definition, choppy. That is, it lacks the necessary 2.25 points of price volatility. But notice that the overall formation really isn't too bad. The highs in price and the middle low are easy to identify. And the two highs here should be about 10 to 15 minutes or so apart. If it was a buy signal, we'd be looking for the base spread to be 10 to 15 minutes or so. Overall formation of a choppy signal is really important, and it should have more than 1 point of volatility. Extremely choppy signals are ineffective, even with the 3-minute confirmation. Also, don't try taking choppy signals in a congested sideways condition. Choppy channels are hard for price to break out of, and they should be avoided. Make sure that the 3-minute chart confirms the signal direction on the DS, the MACD, and the price candle color, as you see in this example. If so, you may take the signal for 1 point, and you might use a 1-point stop. You shouldn't have to use more than a 1-point stop for taking a choppy signal with good formation using your 3-minute chart. Don't forget to look for the extra signals that you will sometimes get with the 3-minute chart. You can allow 3/4 point for a technical double top or double bottom, as opposed to the half point that we use on the 1-minute chart. Also, signals on the 3-minute chart often work even though price has moved more than our 5.25 point definition of a trend on the 1-minute chart. Although the use of the additional 3-minute chart is optional to the trader, we strongly recommend it, especially when the overall market is choppy or in a choppy low volatility cycle. The support sessions and the daily recap makes good use of this valuable chart addition. This concludes our discussion of the 3-minute chart. And if any portion of this section was not completely clear to you, then we suggest you review it again, or as many times as necessary. And when it is completely understood, then you can proceed to Section 12.